Hi everyone, welcome to the Buffett and Beyond Saturday Market Recap Letter, and this is June 24th, 2023. And remember folks, if you want to live on this beach watching the sunrise like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And this week, well, the market finally decided it was time for a pullback, or what we call a reversion to the mean. And we'll see where this market takes us, but we believe we've seen the worst of this market for some time to come, and last October was indeed the bottom. In our weekly stock analysis video, well, let's go over Etsy, which we haven't looked at in quite a while. And it's a pretty decent stock. The numbers are good. The problem is revenue slowed down to a trickle this year, but is expected to pick up in 2024. Still a little below the average stock out there. But this company is expected to earn more next year than it ever has, and I'm talking about earnings. Now, our ETF video, well, most ETFs are pointing down along with the market. However, the healthcare ETF is heading up. Now, let's see how our top 6 stocks in this ETF have performed over the past 5 years. And actually, when you include dividends, our top picks outperform both the S&P and the healthcare ETF by a very nice margin. And here is the S&P 500, and we can see that it pushed up this top band, and these are volatility bands, the 2 red lines. The center line is the 20-day moving average, and yeah, folks, we're down for the week, and it looks like we're going to touch that 4,300 level, which just happens to be that 20-day moving average. And we'll do that next week, probably Monday or Tuesday. And down here, we could just see that it looks like our intermediate term indicator is maybe pointing down. We'll look at it closer in another slide. But if it crosses over, that's a sell signal for a while, and we should think about maybe dropping below the 20-day moving average should this crossover occur, and it looks like it just might. Now, the black line here is the S&P 500 cap weighted, and that means the number of shares outstanding times the price of a particular stock. And the whole idea behind the market making nice moves this year so far were on the back of about 8 to 10 stocks. This other line is the S&P 500 equally weighted, so it counts all the stocks equally in the S&P 500. And what had people worried was that this rally was taking place and this S&P 500 equally weighted index was not participating. So the market was going up here and the other 490 stocks in the S&P 500 on average were going down. Then all of a sudden the rest of the market kicked in, and this whole area in here is June, so the rest of the market kicked in as the entire S&P capitalization weighted index was also rising. Now, what I wanted to show you is that they are all falling. So even the tech stocks are falling, and the rest of the S&P 500 is also falling. So this is a good way to measure if all stocks are participating in any movement. And here they weren't. And that's May, and then in June, the entire market kicked in, and we kind of topped out over here and started going down, and so did the rest of the market. Now, when we look at a chart of the S&P 500 and the candlesticks, we can see this movement in the short-term indicator moving down. And of course, this is the market, and this green line is that 20-day moving average. Now, if we come all the way down here, we can look in close and we can see the crossover has not yet taken place. But if the market continues down, I'm recording this about 20 minutes before the market closes, and so we'll have to wait till Monday or Tuesday to see if we get the crossover here. And if we do, that's an intermediate sell signal, and therefore we are staying away from any new positions in any stocks in the market now until this little correction takes over and or is over, and we get some up signals again. Once again, this is the green line is the 20-day moving average. Below that is the 50-day moving average. And notice the 20-day moving average is around 4,300. The 50-day moving average is around 4,200. So we have some nice round numbers where this market will pause and let us know what it wants to do. And portfolio protection, last week the June SPY 410 put expired. And for those of us who want to be protected all the time, went out and bought the September 15th 410 put, which was very, very inexpensive last week. So we bought it in here. Now, some of you who don't want protection all the time will wait for a crossover of some sort or a fall below the 20-day moving average and either buy puts or use some trailing stops or inverse ETFs, which we'll talk about next week, if warranted, because if this decline stops next week, then we don't have to talk about it. But we probably will be talking about some of the inverse ETFs if we get that crossover to the downside. So, folks, we had a down week, first time in a while, and we're just not used to it. We got spoiled for a while, and right now it's a beautiful day outside, and this weekend is supposed to be very nice. So get outside, go for a walk, take your mind off the market, be with your loved ones, stay safe by all means, and folks, enjoy your weekend because the market will be back here on Monday, and so will we. All right, stay safe, folks. See you in a couple of days.